សូមស្វាគមន៍សួស្តីឆ្នាំថ្មីសម្រាប់2019ឆ្នាំនេះជាឆ្នាំជោគជ័យហើយជាឆ្នាំសប្បាយប៉ុន្តែសូមទោសនាងខ្ញុំថ្ងៃនេះសូមនិយាយជាភាសាអង់គ្លេសពីព្រោះអីភ្ញៀវរបស់ខ្ញុំគាត់អត់ចេះភាសាខ្មែរ Hi, welcome to the new show of 2019. This year is a great year for everybody. Hopefully, it will be a successful year for all of us. Today, I have a special guest from First Bank, Kris, who will share New Year resolution with us about finances. Normally, people care about their health. They want to be healthier, they want to eat better, but not so much about finance. So I want the first show of 2019 to be about financial because, I noticed that most of us are struggling in this field. So please welcome Kris.
Thank you for having me.
So how are you today?
I'm doing well, and yourself?
I'm great. Thank you so much for being on the show on such a short notice.
Absolutely. Anything I can do to help.
I would like for you to share the information with us how to better prepare ourselves financially because most of us are living paycheck to paycheck and it's very hard to set aside even if it's $50 a month. Right. What is your advice for that?
When it comes to finance, it gets very hard sometimes for people living paycheck to paycheck. But the best way to save, I would say, is to split. If you have direct deposit, to split your direct deposit. That way you don't miss that money. And you can split it into a different checking account. You can split it into a savings account. You can split it into a different bank. Most people don't realize that you can split it in multiple ways. It really...
I see. I didn't know that either.
Yeah, it depends on your employer on how many they're willing to split it to. Most employers allow you to split it to at least 5 different accounts. And once again, those accounts could be with the same bank or it can be at a different financial institution.
Okay, for example, for me, I would do a split, right? Half to checking and half to saving. But I notice myself end up transferring from saving into the checking when the checking runs out.
Right.
What is your advice for that?
I would advise that you split into a different bank. Okay. And with that bank, do not set up online banking so that you can feel like it's money gone, money you've forgotten about.
Okay. How about I ran out of money in this bank? What is going to stop me from just using another card from a different bank?
It's going to take discipline on your part. When trying to plan for savings, you need to make sure that you plan with yourself first. A lot of people make resolutions and think, I'm going to save X amount of money, but don't put a plan together and do not execute it. So you need to hold yourself accountable. You need to make sure you put goals aside and keep that discipline. And one way of keeping yourself accountable is having someone else hold you accountable. So if you have a spouse, if you have a best friend, a parent, make sure they are in the loop with what your plan is and make sure that they're helping you along with that plan to keep you disciplined. Do not have that money and say, okay, I have $600 here. So as soon as I think I'm short on money, I'm gonna pull from that. Have that $600 there and forget about it. Don't even allow that to be an option. Just, it's money gone. Act like it's from FICA, where they pull it from your check, you're pulling the money from your check. And I've always been told that you should pay yourself first. And what that means is when you have your check, you should set aside something within your budget that you're comfortable with, a certain amount that always goes towards saving, which is paying yourself. And everything else allocates towards bills and expendables.
How much would you be realistically a good number to start with?
With saving?
Yes.
If you're able to, I would start with 10%, at least 10%. Set that away and once again, forget about it.
Okay, at what age would you recommend to start saving?
As early as possible. Some parents, they'll come in and start a minor savings account. And there's also a product called a 529 product that allows parents to save for colleges for their children. So I would advise that it starts with the parents to save for the kids, and the parents should educate the kids of what they're doing at an age that they feel comfortable, where the children understand the value of the money. And once that child understands it, allow them to save the money going forward.
At what age would you think is the best age to start? Because you see, I have a bad habit that passed on from, my mom. And so I didn't know to pass that on to my children at a younger age. When I started pressing on saving with them, they're already teenagers. So it's kind of like too late for them. So now, all three of us, my two daughters and I, were sloppy when it comes to financially prepared and spending habits. So at what age would you think is a good age to start?
I would say when kids are in school and they're first counting money. So that's usually kindergarten, first grade. When they're learning how to count money, they're excited about it. So let them know that you as the parent have started a savings account for them already. Kids are a lot tech savvy, so allow them to see the online banking and say, this is how many quarters, this is how many dollars that add up to what you have. And just let them know what they have currently. I wouldn't say necessarily have them do it, but just let them be aware of it. I would say at least 5, 6 years old. As they get older, as they do chores around the house, as maybe you give them an allowance, then I would allow them to choose to save it or choose to spend it. But around that age, 5 to 6, and then whatever age you start paying for allowance.
Okay. How much does the parent need to start putting aside for the children for college, would you say is a good amount?
Right. College is expensive, and it only goes up as times goes. So it really depends on the income of the parents. If they can put away more than 10%, then that's good. But there are times where you can't save that. But 10%, let that be a rule of thumb if it's comfortable for the parent to save for the kid.
For family who have like more than 5 children, that would not be realistic for them, right? So what would you have advice for, okay, let's say not 10 children, but let's say 3 children. How much would they need to set aside for the kids to attend college? Because yeah, you're right, college is expensive, tuition is expensive. How much would you say to start putting monthly aside for each child?
Monthly for each child, you would have to find out first what college you would like that child to go to. And I would research that college and find out what the tuition is each year. And from there, you can figure out a number that breaks down a 4-year, 5-year education. So if it's $10,000 per year at the college you would want them to go to, I would break that number down per kid and be able to save it per month or per paycheck. Usually people get paid bi-weekly, so 26 paychecks in a year. So divide whatever that number for college is by 26 and see if that's a number that's attainable. It might be too big, but try to get as close to it as you can.
Okay. What other advices would you have to share with us on saving?
I would say with savings, just be disciplined with the savings. Always keep savings in mind and have a goal. A lot of times people just put money away and not have a goal. Have something tangible. You can have multiple accounts. Sometimes people don't realize that. You can have multiple checking, you can have multiple savings. So some people like to save for vacation. So you have an upcoming vacation, you want to go to France for Christmas. Okay, so France is going to be in 12 months. So have a number in mind, once again, of how much that vacation is going to cost. That way you can put that much money, each paycheck aside for that specific goal. And once again, you can have it for college, you can have it for vacations, you can have it for weddings. Have different goals and be disciplined with it and separate the money. A lot of times when people save, they don't want to separate it. They'll just commingle it in their one checking account and think, well, it costs money to have different accounts. It does cost money, but wherever you bank at, just make sure you're looking at the disclosure statement that's given to you and find out what the minimum balances are. A lot of times with savings accounts, The minimum balance is only $100. So make sure you have at least $100. Make sure there's some sort of activity, because you have to have activity every so often. If you're saving in the account, then you're okay with the activity. But if you just have money saved, let's say you have $5,000 saved and you haven't been able to add towards it, then that might be an issue, because if there's no transactions, you will get notification. You should have transactions soon in that account, or you might incur a fee. But you can have multiple accounts, as many accounts as you please, for whatever goal, whatever you have in mind.
Okay, now I know you're working for First Bank, but which bank would offer the best interest for saving?
You know, that's a loaded question. Banks change their rates all the time, and rates can change every day. So it's something that you, as a consumer, should look online and see what the rates are advertised. Look in the paper, look online, look at the billboards. There's always changing rates, and there's no one bank who's always going to have the best rate, whether it's savings or with loans. It's always changing. So you, as a consumer, you need to figure out what's best for you. Is it best for convenience of having a bank at every corner? Is it best to have a relationship? Some of the smaller banks are more relationship driven than some of the bigger banks. So as a consumer, you need to figure out what it is that's best for you in your situation.
Okay. When we come back, we will find out what kind of saving accounts is best to have. Okay, so now we would like to talk about what kind of saving accounts will be best to have.
Yes. So there's several different savings accounts you can start with. Once again, there's a minor savings that you can start with. There's a regular savings, and then usually when you save up to usually around $10,000, you can move up into the money market range. The money market savings account is a savings account that usually pays the most interest. Regardless of what bank you're at, those are the ones that pays the most.
What kind of interest is the most? In numbers wise?
Right. It's tiered. So it can start as low as 0.50, and I've seen it competitively go up to in the 2% range. So right now you can get a money market in a 2% range if you have 10,000 or more, or depending on the bank, sometimes the minimum could be smaller than that.
Okay. And what is that account called? What type of saving is it?
It's a money market savings account.
Okay.
And people need to be aware about the difference between checking and savings.
Yes.
The big difference is you earn interest on savings account, but there's a federal regulation that dictates the difference between checking and savings, and that's due through transactions. So with savings accounts, you can, with the money market, write checks off of it, but I wouldn't advise you to do so, just because you're limited to 6 transactions a month. Once you get past that 6 transactions, you'll get a letter in the mail saying you are in violation of Regulation D. And what that means is you've gone past that 6 regulatory transactions for your account to be considered a savings account. That is a federal law. It's not a banking law. A lot of times people come into the bank upset, thinking that the bank is charging them a fee because of that. That fee and that regulation is through the federal government.
Oh, wow. I did not know that.
Yes.
But I do get a message all the time. You have now reached the federal blah, blah, blah of transferring.
Absolutely.
There's a fee that comes with that?
The first time is a warning.
Okay.
The second time is a fee. The third time, they're going to close the account.
Are you serious?
Yes.
Somewhere, did you hear that? My daughter asks me all the time. She's like, Mom, what does that mean? She would call me and say, Mom, what does that mean? Okay. And I would lie to her and say the IRS is going to come after you if you keep transferring. That's just my way of helping her to stop.
Yeah.
Yes.
No, it's a federal regulation that is trying to encourage you to save. Okay. So it's a small penalty. It's a slap on the wrist type of penalty, but they want you to save that money, and that's what it's for.
Okay, wonderful. Now, checking, if you do not have direct deposit, usually bank can charge you so much money.
Right.
what is the best way or what is the best bank to open a checking account with?
Right. With checking accounts, there's many different accounts that you can choose from. So depending on the bank would depend on the type of account you have. Most banks have similar checking accounts, just different names depending on the bank that you go to. But you can have a student checking account. There's a bare bones type of checking account. There's a checking account for people with high balances. Sometimes there's a checking account for seniors. Sometimes there's a different type of checking account for people in service who serve our military. So one thing about checking accounts, when you have a checking account, you have the option to have a debit card. And everyone loves debit cards because they spend it, forget about the cash, and they forget about it. One thing I would warn you with debit cards is if you're going to be electronic, be all the way electronic, meaning sign up for online banking. When you sign up for online banking, you can see your balances immediately, and you can sign up for alerts. So you can set your e-alerts, and once again, depending at the bank, they call it different things. But you can set up e-alerts on your phone or your email, and it'll send you a message whenever you get past a certain balance. For me, for example, I have it set to where if my account gets below $100, I get a text message. So I'll get a text.
I did not know that.
Right. I get a text, and basically it's saying, slow down. You're spending too much.
Okay.
Or you need to transfer money from your savings account to your checking or from a different checking account. And once again, being electronic, you can log on to whatever bank website and transfer those funds. But it's a good way to warn yourself, slow down.
Okay, now is that set up something that you can do directly with your online banking, or is that a separate app?
No, that's what the online banking app that the bank provides.
Oh, wow. I did not know that.
Yeah. Most banks, I would say most major banks, even smaller banks, have that option.
Okay.
And then also with your debit card, you can elect to what they call opt-in and opt-out. And what that means is it allows you to overdraft your account or not overdraft your account. You can overdraft your account, and if you do, you will have to pay an overdraft fee. If you choose to opt out and not overdraft, then the transaction that you're doing is going to be blocked at that time. One thing as a manager, as a banker at one point that I share with the customers, it's up to you and your comfort level. If you're out in an emergency and you have to call a tow truck to come get you and you're 1 penny short of what the fee is, if you opt out, it's going to cancel that card and it's going to cancel that transaction and you won't be able to make that purchase. Where if you opt in, if you're a penny short, it will allow you to overdraft and you will be able to have that transaction.
Wow.
Yes.
I'm like, this is so foreign to me. Thank you so much for sharing. Okay, now how often would you recommend to check on your account? I'm very sloppy. I wouldn't check it for like months. And then suddenly I'm like, wait, these people's been charging me for how many months now?
Right.
So how often would you recommend to check your account?
That's a good point. A lot of people don't. And you live life, you come home, you're tired, you don't want to check your account. I would advise you to check it every day. There's a lot of fraud, especially with the new year, usually around the holidays. There's a ton of fraud that happens. So you need to be aware of what's going on with your account. Once again, set up alerts, go into your account. You can also set up an alert to give you daily balances. So you may not have to go and look at all the transactions, but have an alert that let you know how much is in your account that day. And if it looks off, then log in and look at the different transactions and see what's going on. Another thing I would like to mention is shopping online. Be careful when you shop online because you'll do a trial offer and it says free for the first week and people forget. They're like, oh, a week later they get charged for it, they forget about it, then they have this monthly occurring fee that they get and they don't know what this $40 is. And a lot of times those companies are very vague. So even if you're looking at your online banking, it'll have a description that doesn't really describe what they do and it'll leave you confused. And so sometimes people will just keep it because they don't really know what it is. A lot of times it'll have a phone number listed. Make sure you call that number and see what that is and cancel it. Ask them directly to cancel it. They should cancel it within 3 days. If they don't, then come into your bank, let your banker know what's going on, and there's ways that we can help you with that.
Yes, it happened firsthand with my daughter. She signed up for a monthly subscription with Ipsy, and they keep billing her every month. And she called to cancel, she sent email to cancel, but they keep sending it to her every month until she had to close her account and open a new one, which is a lot of work. But she couldn't get it to cancel. So,
and I would advise as well, and back to the different types of checking accounts. So with the checking accounts, without direct deposit, you would have to keep a minimum balance for most of the accounts. Some of the accounts, if you're a student, they'll give you a break and you don't have to keep a minimum balance. Sometimes if you're a senior, you don't have to keep a minimum balance. If you're in the armed forces, you don't have to keep a minimum balance. So just make sure you're in the right product. And I bring that up because of exactly what you said. Your daughter and whoever else can have multiple checking accounts. And so even with myself, I have multiple accounts. I have a main account, and then I have an account that I use to pay bills. And so I'll transfer funds from my main account to my bill account so that it doesn't interfere with my main account where my direct deposit is. You don't want to give out that banking information to too many people because if fraud happens, it's going to hit that account and you're going to be wiped out. You won't be able to pay your bills. So have a separate account where you do all your billing or you do your online shopping. That way, if some sort of fraud happened, it will happen to that account and not directly affect you, and you can go and cancel the card or cancel the checking account. And if you only have one checking account and you have to cancel the account, to your point, it's a hassle. It creates a lot of time. You might have to take off work. You don't have the time to do that. Where if you have multiple accounts and you have a bill pay account, it'll be a hassle to close out that bill pay account, but you'll still be able to function because you have a main account that you can work with.
Okay, wonderful. And you mentioned fraud a couple of times. This happened to me also firsthand, is that when I check my account, it was like a few pennies. It shows that, this company, and I thought, oh, it's only a few cents, that's okay. And then the following month, it shows a few dollars, and I had no clue where that few dollars go or what company was charging a few dollars. And again, I'm like, oh, this is only a few dollars. But it's the third month that my $2,000 went missing.
Wow.
And that's when I went to the bank and said, what happened? And that's when I found out that it was fraud. Fortunately, a bank is really good at reimbursing you. But that is just something to pay attention to. A few pennies may not, you don't think it's much. But is that kind of like a testing for the scam?
That's exactly what it is. And it's good that you have that relationship with your bank. And I would advise everyone to have some sort of relationship with your banker. If you don't have a banker, go in and ask to speak with the banker, and they will advise you on these type of scams that you're talking about. We see it all the time. There's a Craigslist scam, there's a lotto scam, there's a I'm a prince somewhere around the world scam. So there's all kinds of scams where they tell you to do a service and pay you for something that you haven't done. So if it sounds too good to be true, it is. So if they're telling you I'm gonna pay you thousands of dollars to take this money, deposit into your account, wire me half of it, for that reason. That's too good to be true. That's false. That's a red flag. Or if you get some sort of lotto, or I won the lotto in a foreign country that you've never been to, or a lotto that you've never even entered, it's fake. So during the holidays, they know people are vulnerable. They know they need extra cash. You're like, wow, I could use that to buy extra gifts. And so people kind of have their guard down and they're able to believe more than what they would normally believe. So be careful with the scams. And to your point about the few cents, yes, that's a very sophisticated scam. So what they're doing is they're going in to see if their account is open. So they want to see if we do 1 cent, 2 cent, is that account active? Is it open? And if it's not, it'll return. And so they'll test it. They'll start with a few cents, like you said. They'll start with a few dollars, and then bam, they'll hit you with the big one. So be aware of it. Even if it's 1 cent, 2 cent, $1, $5, check your balance. A lot of people say they don't have time to do it, but I would rather check the balance now than have to go through a fraud claim, because that's going to take time.
Yes.
It can take upwards of 45 days for you to get your money back.
Yes, that's true. And timing, which a lot of us don't have.
Correct.
Okay, when we come back, we will talk to Kris about business banking. ជំរាបសួរ Okay, let's get into business banking. I noticed there's a lot of new entrepreneurs nowadays. My daughter is being one of them. She started the lashing company, hasn't set up a checking account yet.
Oh, no.
And I keep bugging her that she needs to set up some kind of LLC or something, but I don't know much about it. So what is your advice for those people who just start a new business, especially for young entrepreneurs?
Yes. Business banking is one of my favorite topics. It can go in many different directions. With business banking, what people don't realize is those accounts are free. Those are usually there are no minimum balances on the account, and you can open a business account with just your name. So I can open a business account, Kris Allen Lawnmower Service. Now, if I don't have a fictitious name statement, or if I haven't filed articles of corporation for a corporation, your full name has to be on the account along with whatever the name of the business is. So you don't have to file that, especially when you're first starting. You may not have the funds to do that. So you can start off as a sole proprietorship with your first name, last name, and the name of the company in the title. As you build your business, yes, you can get LLC documentation. You can become a corporation, and you can start with your business accounts that way.
Is there a better account for young entrepreneur, or is there like a separate accounts? I have no idea about it.
With the business banking, it's usually pretty basic. So you have your basic business banking, and then you have like your corporate type of business banking where you have what they call analysis. And if you have large deposits, meaning hundreds of thousands, millions of dollars, sometimes they'll give you credit towards that balance, which will offset some of the fees that you get with your business banking. And some of those fees are some exciting products. On the business banking side, there's a lot more products that make things easy for the business owner to do their business and not worry about banking. Some of those features are what we call treasury management. And before I got into banking, when I heard treasury management, I thought it had to do with investing or a lot of money, but not that at all. So what treasury management does, it helps the business with things like wire transfers. So your business running your eyelash shop, you don't necessarily have the time during the day to come to the bank to send out a wire. You can have it set up to where with your business online banking, you can send a wire from your house. So you can send wires, you can send ACHs, you can do billing options with your online banking. There's products called Lockbox where if you are an entrepreneur that works from home and you send a bill out, but you don't want people to know where you live, and you may not have a P.O. box. There's what they call a lockbox where you give them the address to a P.O. box. It's usually somewhere in the Midwest, Chicago, and your customers would send it to that lockbox, and someone would pick those deposits up and process it for you. So that way, that's one less thing you need to worry about, and you get notification every time that it's picked up and deposited. So that's one convenience of business banking. But with treasury management, there's many different things. You can do merchant services where you want to collect funds electronically. A lot of people are moving towards that. So you can have a virtual portal if you do a lot of online type of business. So if you sell products online, you can have kind of like a PayPal area where they click here and you can pay. So that's an option. It's with the business banking, there's many different ways you can go with it.
Let's talk about PayPal. Before, it used to be if you sent money to a business for business exchange, they would charge a fee. But for family and friends, it used to be free. Right. But I was just slapped with a big fee of $30 for sending my daughter, who's a few blocks away from me, but I used PayPal. I was charged, they didn't charge me, but they charged her $30 for receiving the funds.
Got it.
So now, and I'm assuming that it would also, there's some type of a percentage for a business to receive the money, right?
Right.
Now, do banks have, some kind of app to do that so that people don't have to pay fees?
Actually, yes, and that will be on the consumer side. So on the consumer side, most banks have an app, a program within the app that allows you to send money to someone who either banks at the same bank or bank outside that bank, and it'll send them a text message or even an email with a notification that you've sent them money. And from there, the user will take that information, put in their bank account number, routing number, and usually it takes about 3 days for them to receive it.
Okay. And then if you want it right away, quicker than 3 days, then there's a fee, correct?
Depending on the bank, it could be a fee, or if you want to send money right away, you would have to do a wire transfer. Okay. And wire transfer, yes, there is a fee for wires.
Okay, what any other advices do you have for business or young entrepreneur?
With businesses, I would say within your first 2 years or after your 2 years is when you become attractive to banks as far as lending. So when you have a business, banks are very conservative when it comes to lending. They don't like to take on too much of a risk. There are programs that startup businesses can go to, such as the SBDC, which is the Small Business Development Center. Every community has one, and it's sponsored by the SBA, which is a federal organization. So you can go to places like that, and they can help you with business plans. They can help you with grants. They can help you with structuring your business and allowing your business to run smoother. A lot of times business owners want to do everything. And so you can go to those centers and they will teach you to take a step back, hire help, because if you hire help, then you can be more productive, so on and so forth. So you have those business centers locally in every community. So I would advise startup small businesses to go to your local SBDC, set an appointment. They have classes, they have CPAs that come in and teach you how to do your books, to teach you how to do your taxes. One thing that a lot of young business owners don't realize is taxes is very important. Once you get to the point to where you need to borrow money, if you don't do your taxes properly, it'll be hard for a bank to lend you money. And a lot of people get upset when it comes to lending money. Most people believe you only borrow when you are in debt. That's quite the contrary. Banks want to lend to you before you get to that point, because it shows responsibility. It shows that you can see the future and you can plan for the future. If you're already bleeding, then how does the bank know if what we give you is going to help you survive? So banks want to be able to help proactive businesses that are able to look forward and see the future and be able to help with things like payroll and cash flow and help you buy equipment, things like that.
Oh, wow, I didn't know that. Now this SBD, is it a free services to young entrepreneurs or to any business owners?
Yes, the SBDC is free. It's funded through the federal government, through SBA. Wow. So it's another program that the federal government provides to your local communities. And I would say, my opinion, through programs like this, the government would like to see more small businesses flourish in the local communities. And within your local community, I would also check with your local city. Sometimes your city will have programs for small business owners and grants, and there's a lot of options out there that people don't know. So I would advise that you start with the SBDC, whatever city you're working in, go onto their website and look at their economic development section of the city website and see if there's anything there to help young entrepreneurs, startup businesses be more successful.
Oh, wow. That's wonderful. I didn't even know that that's such an option.
Right. It's one of those greatest things that's never advertised. It's word of mouth. And once again, this is why you come into the bank and you have a relationship with your business banker, with your personal banker, with the manager, with your investment, your broker. These are the reasons why you should go into the bank. Most people, by convenience, don't want to go to the bank just because they don't have the time. They can do everything online. They can use their debit card. But that human interaction is where you're going to find this type of information out.
Yeah, normally when I go to the bank, I either go directly to the ATM or go to see the teller and just get out of there. I never make an effort to make a relationship with a banker.
Absolutely.
So that's good to know.
It's something you should do, especially if you're a business owner. You should have a relationship with your banker as well as your CPA. And you need to keep them aware of everything that you're trying to do for that year, for that quarter. That way we can tell you about promotions that are coming up. That way your CPA can let you know about new tax laws. Let your CPA know if you're looking to buy equipment, or if you're looking to expand, or you're looking to save this year, you're looking to add employees. Those are things your bankers and your CPAs need to know. That way they can advise you accordingly.
Wow, that's wonderful. When we come back, let's get into credit cards. Okay, now that was very interesting. A lot of things that I didn't know about. But let's get into credit cards and what to look for, what to watch out for, and what type of credit cards is best to have.
Absolutely. So credit cards, you have two types. You have what they call secure credit cards and unsecured credit cards. Unsecured or secured credit cards are for people who are starting out to establish credit. So you might be young, you might be a teenager, or maybe you've had challenged credit in the past, had a bankruptcy, and so you may not be able to have what they call an unsecured credit card. So sometimes that's a starter credit card. And a lot of times when you have those secured credit cards, it requires a deposit of some sort. So it's as little as $300, and I've seen them go all the way to $100,000. So it really depends on how much money you have to put down on the credit card. And with that, once again, it's a credit builder type of credit card. It's going to have a higher interest rate just because the risk of default is much higher than an unsecured credit card. But it's there for you to build your credit. A lot of times after 6 months, after a year, either you can call the credit card company or they might send you a letter saying now you're eligible to apply for an unsecured credit card. So I would definitely urge you to either call or be on the lookout in your mail to see if you're eligible for that secure credit card. Now, the secure credit card, it's made for people who have good credit scores, and credit ranges anywhere from 400 up to 850, I believe. And if you're in the mid sixes, 700 score, that's usually when credit card companies are going to send you credit card applications in the mail to apply for their type of credit cards. Now, most credit cards, unsecured credit cards, there's many different ones. So you can have one like your platinum type. You can have your cash rewards, your travel. One thing that I would like to I like to tell my customers, depending on your situation, depending on what you're looking for, will really depend on what type of credit card. So if you're looking for the lowest rate, I would go with the Platinum. And if you're the type that hold a credit card balance, I would also go with the Platinum. If you're the type who charge the credit card and pay the full balance, I would go with one of the rewards. Either you can go with the travel reward or go with the cashback reward. Reason why I say that is because with the rewards, it's usually a higher interest rate with those cards just because of those rewards that you're getting. So if you take good advantage of the rewards of the dollar for dollar, or sometimes it's 2 times, 5 times, whatever that is, take advantage of it, but just know the interest is higher, and I would advise that you pay the full balance just so you're not paying that higher interest rate. With most credit cards, you'll have a entry rate. Most of the times it's 0%, anywhere from 6 months to I've seen up to 24 months, so 2 years. Take advantage during that period. They want you to use it. That's the whole point. So take advantage, use it. They also will give you the balance transfer option. So you'll have 0% up to 2 years, and they say you can bring over whatever balances from other credit cards to debt consolidate at 0%. One thing that they don't really advertise is something called a transfer fee. So the interest is 0%, but there's a transfer fee that's usually around 3 to 5% that they would charge for you to do that transfer of the debt consolidation.
Oh, wow.
So read the fine line, read the fine print, understand what all the fees are, the financial fees, if there's transfer fees. That's subjective depending on the credit card company. It's not a set fee. So look out for it just because that is a fee, but it's a one-time fee. So even though it's 5%, 6%, whatever it is, it's still a better option than paying the regular credit card percentage. And a big thing about credit cards that a lot of people don't realize, it's tied to the prime rate. So the Wall Street prime rate is determined by the federal government. Oh. So when you hear the government shut down, that affects prime rate sometimes. When you hear that the feds are meeting to discuss rates, that's what they're talking about. The feds determine what the rates banks should use to lend to customers. So
wow, yes. I did not know that.
And so when you hear that the feds have met and that the rates are going up or down, that affects you directly because your credit card rate is going to go up. Your credit card interest rate is a rate that's not fixed. So depending on what you're locked in at, it's called a variable rate. So variable means it can change, and it can change at any moment. And you have your variable rate plus your margin, and your variable rate is based on the prime rate, and the margin is what's fixed. So that's a fixed rate that's always going to stay the same. But whenever prime goes up or down, that's going to affect your total rate with your credit card. So be aware of that. Understand that the rate is changed. It's not the credit card's fault. It's not the bank's fault. It's determined by the federal government.
Wow, that is amazing. So it's true, we are controlled by the government.
To a certain extent.
Yes. Now, Suze Orman, the financial advisor, famous around the world, I would think she wouldn't recommend to have a credit card. But banks love to open a credit card for you. Why is that?
It's just another convenient way of having access to cash.
And then also for them to charge you with the interest fee?
Possibly. If you pay your balance, then the bank doesn't make any money. So if you don't like the bank making money, just make sure you spend as though it's your checking account. So a lot of people get in trouble because they see it as this is free money. And it happens in college. It happened to me. I was in college and I had all kinds of credit cards, platinum cards, and I didn't even have a job at the time.
Yes.
And so you spend it and you're like, woohoo, and you don't necessarily know the ramification of that credit card. It is not always taught in the family or at schools how to control credit, how to fix credit, so on and so forth. So you have to be careful with the credit card and don't spend it as though it's free money. If you spend it as though it's money that's already in your account, and at the end of the month you can pay it, then you'll be fine with credit cards. But if you think it's a free shopping holiday, then yeah, you might be in trouble.
Yes, that's what my daughter is facing right now, because she's 21 in college, and she was so excited one day because she called me and said, "Mom, I got one of those black credit cards,
wow.
you know, like the maximum of $7,000, and she doesn't even have a job."
Right.
And then I said, "Summer, be careful
Absolutely.
with that credit card, because the interest fee, you're going to have to pay it back." She's like, "What? I have to pay it back?" I said, "Yes, you have to pay it back, and you have to pay high interest."
Right.
But then in her mind, this is $7,000 of free money.
Right.
So she blew that amount in a few months.
Okay.
And now she's stressing out, because how am I going to pay this back? I'm in college. I have a part-time job.
Exactly.
And so
That's where mom comes in, right?
Yes. And now she's like, "Oh, it's okay because I don't have to pay interest." Now, is that true, or how long is that going to last?
It definitely could be true. And as I mentioned before, with new credit cards, yes, there could be 0 interest for 2 years. But they want you to pay that in those 2 years. If you do not pay that in those 2 years, then your interest rate is going to be sky high. It's going to be 19%, 15%. It's going to be high. And so that $7,000 will compound, and it will quickly become $8,000, $9,000, $10,000. And when your credit card is maxed out, that's one of the factors that affect your credit. Usage of credit is 30% of your credit score. So if you're maxed out, that's going to directly affect your credit. So it's a good rule of thumb to keep your credit cards under 40% if you're going to carry a balance. I would suggest not to carry a balance, but I understand that things happen. So if you're going to carry a balance, keep it under 40% of the limit of whatever that credit card is. That way it shows a credit card company responsibility. It shows that you're able to make not just interest-only payments, but interest and principal payments. And stay away from just the interest payments, because the interest payments does not go towards the principal. So make sure you're paying more than just the interest. Make sure you're making a larger payment. And you can also make multiple payments. So just because your bill is due at the 30th, you get paid twice a month, you can pay it twice that month. Now, sometimes it can get a little confusing, because if you pay it mid-month, the credit card company might think that you're trying to pay it for the next month. There should be an option to say principal only. And if it's not, you can give them a call before making that payment and say, "I would like to make a principal-only payment." That way you can chip away at what's owed.
Wow. Wow. This is amazing information. I feel like all this information you're sharing today is all for me. Did you hear that, Nancy? Because, I didn't know that. So all of my credit card, I like to max it out.
Yeah, right.
I like to max it out, because I'm like, oh, might as well max it out, because I'm going to pay it anyway.
I mean, and if you can pay it, then yeah, max it out, but just make sure that by that billing cycle, it's either paid in full or a majority of it being paid. And another reason why banks give you credit cards is so to help you build your credit. Another part of your credit score is length of credit history. I believe that's 35% of the score. So if you went through your whole life, if you went through college and you never established credit, and say you get you're a TV host and you want to buy a new car, well, you might make a good salary, but you have no credit, and you're like, well, I make $50,000. Why can't I get a car? It's because you never established credit. So the best way to establish credit is through these credit cards. And I would advise maybe having at least 2 to 3 credit cards, just so that it shows you have some sort of credit history and that you actually use it, pay it off. If you don't like credit cards, that's fine, but just have it to where you have some sort of credit history.
Okay, these are good advice. Thank you so much. But sadly, we're coming to an end. But before we end, do you have any advice for the viewers on any topics regarding finances?
I would say if you have any specific topics, get a hold of Nancy. I'll be more than happy to come back and share my expertise on whatever topic that it is that you guys would like. I would like to call myself your friend in banking. I don't have a vested interest. I just want to educate and help people know good banking practices, good credit practices, help small businesses grow. That's my goal.
Yes. I would like to have you come back to talk with us about saving for purchasing a house to become a homeowner, because the rent is skyrocket and, but you're just paying into somebody else's property.
Right.
So I would love to have you back to cover that topic. But until next time, thank you so much for being on my show.
Thank you, and it's my pleasure.
Thank you, Kris, for coming on to give us great advice on how to prepare financially for 2019.
Thank you for having me.
And thank you very much for watching. If you have any questions or would you like to see more episodes about how to be financially free, feel free to comment below. And until next time, Chumrip Lia.